You've made the decision to become an owner of an insurance agency, and, more specifically, to take the reins of an existing agency. Perhaps you've started to look at specific agencies you would be interested in purchasing. Here are some things you will want to consider in deciding which agency to pursue. First, how large an agency do I wish to purchase? Your primary thought would be to consider what you can afford, just as you would with a home purchase. However, it is actually less difficult to obtain financing for a larger agency than it is for a smaller one. Why? Because your lender will be focusing their attention on the size of the agency's cash flow, rather than upon your own financial status, in calculating the size of loan they are willing to provide to you. Larger agencies generally have greater cash flow than smaller ones, and this fact would more than compensate for any higher monthly payment your loan would entail. So, if you are choosing between two agencies and are looking ahead as to how the financing of your purchase will work, you may want to prioritize your choice toward the larger agency. Next, what should I pay for the agency I have chosen? Well, obviously, you will want to pay as little as possible. And sometimes the seller will have their agency priced at a discount for any number of reasons. Just the same, it would be good to know what the market is saying about agency sales prices. Initially, you will want to research what the earned annual premium for your targeted agency is. Then, you will need to consult current industry standards to determine what price variably sized agencies are selling for. This is because books with more than $2 million in annual premiums are valued at higher multiples than books with less than $2 million in premiums, which will proportionately affect their prices. Next, what kind of lender should I work with, SBA or conventional? There are several considerations to be made in deciding which type of lender is the best choice to finance your purchase. Here are the reasons we would recommend working with an SBA lender. The down payment can be as little as 5% with an SBA loan, while it can be as high as 15% with a conventional loan. Experience in the insurance field is not required for SBA loans, while it usually is required with conventional loans. FICO scores need be just 650 with SBA, while scores of 680 are usually required for conventional. For an SBA loan, you are permitted to add $100,000 or more in working capital, whereas conventional loans do not permit the addition of working capital to the loan amount. Because SBA loans are government guaranteed, they provide the lender with more flexibility throughout the approval process, leading to a higher percentage of successful closings. The upward limit to which you can borrow with an SBA loan is $5 million, while borrowers are limited to as little as $1 million with conventional loans. The SBA is willing to fund smaller books, those which are under $2 million in annual premium, while conventional lenders usually will not. There are no prepayment penalties associated with SBA loans, while such penalties usually are attached to conventional loans. Next, which SBA lender should I choose to work with? Although many financial institutions can process SBA loans, only a few actually specialize in the processing of insurance agency acquisition loans. Such specialized lenders have the specific experience and expertise required to successfully close these types of SBA loans, and you should strongly consider choosing one of them. These lenders can deal competently with issues that may arise, such as required cash flow levels or officially determined agency valuation, issues that inexperienced lenders will not know how to handle properly. Should any adjustments in loan structure be required to handle these types of issues, such specialized lenders can offer the necessary guidance essential to satisfactory outcomes for all parties, buyer, seller, and lender. To summarize, our financing is provided through a preferred SBA lender who specializes in processing insurance agency acquisition loans. This lender has a successful history in closing such loans, even given instances when applicants have been previously declined by other lenders. For those interested in the Allstate opportunity, it is noteworthy that for several years, Allstate field deployment specialists have been explicitly recommending our financial services to agency candidates seeking acquisition loans. We want to wish you the greatest success in pursuing your career as an insurance agency owner, and we would welcome the opportunity to offer our assistance as you are moving toward your career goals.